Welcome to Stock Market Today. It's Alissa, Coram, and Justin Nielsen here, and it looks like we had the FANG stocks leading the session today. Justin, give us a rundown of what we're going to be talking about today.
Yeah, so I mean, we definitely the big thing is Nasdaq 10,000. So we'll talk a little bit about that, and in terms of stocks, we'll talk about Facebook, Netflix, and revisit Wingstop, which was bouncing off of its 50-day moving average line today.
Awesome. Well, let's take a look at the NASDAQ here. As Justin mentioned, hitting that 10,000 mark in intraday trade. It looks like it backed off of that level a little bit to close the session up about 0.3%. In the Dow, snapping its winning streak down about 1%, but the blue chip index has just seen strong gains as of late, but very impressive once again to see the tech heavy index of NASDAQ hitting that 10,000 psychological level.
And here again, this is definitely not something that if you had asked us in March, can you see the Nasdaq hitting 10,000 in June, the early part of June, I would have been like, no way, we need more time. But sometimes the market does what it does, and so you have to react to it. So yeah, the day's action, it did back away from that 10,000 level, kind of closing low in the range. But the big thing is that it was the Nasdaq leading today as opposed to the S&P 500, and a lot of those kind of beaten down names that have been getting to the forefront. It was kind of your old leadership that was flexing its muscles today. So that's very notable. The 10,000 level, that is a psychological level. So while we did just barely hit above it, it will be interesting to see if we can kind of hit that level and stay above it. Especially if we start getting the lows above it. But for right now, that was kind of a touch. That's kind of like drawing first blood. We'll have to see if it can kind of establish itself above that level over the next couple of weeks.
Yeah, and I think the discussion that we've been having on IBD Live about the channel lines, that's been pretty interesting. So we'll definitely provide an update on all of that in more detail for you tomorrow morning. But as Justin mentioned, old leadership shining today. Let's take a look at some FANG stocks, starting off with Facebook. A nice day of outperformance here for the social media giant, up over 3%. Now, it's been trading in a pretty tight range here, Justin, after clearing a consolidation not all too long ago.
Yeah, and this is something that people have to realize is, of course, I, like most people, as soon as I buy something from a breakout, I want it to go up, and I want it to go up, immediately and a lot. But that's not the way stocks always work. Right, exactly. Who doesn't?
Yeah.
But that's not the way stocks always work. It's very normal. 40 to 50% of the time, from a breakout, a stock will go up a little bit and then it'll pull back right back to the buy point. And that's exactly what Facebook did. So this is very natural action. And now today, even though it hasn't made a new high, it's very promising to show that, hey, it can kind of recover from that little pause and re-exert itself. Now, in the meantime, you saw that relative strength kind of, pull back a little bit because, of course, what was happening is the S&P 500 was moving up at the same time. And so that was kind of making that line go down because the line is the performance of the stock versus the S&P 500, as opposed to that number, the blue 87 that you see there. That's that stock in comparison to all stocks in our database. So they're
over
two different
the last
things
52 weeks too,
yeah,
right?
yeah, exactly. So it's a
period.
proprietary rating. So the relative strength line, I mean, that's an easy thing you can do in Excel yourself. It's just a ratio, as opposed to our proprietary rating where we get all fancy with our numbers and compare it to the whole database. So it's important to kind of note when you see that relative strength line pulling back exactly why it's doing that. And so in a lot of the stocks we're going to be talking about today, that's going to be a theme.
Yes, exactly. Well, let's see if it can clear that 240 level.
Right, exactly.
That seems like the next magnet.
Exactly, because that's where it hit that 240.90 level. It got turned away. So if it can kind of clear that high, that kind of shows that it's righting itself and ready to potentially move higher.
All right, and another FANG name on our list is Netflix. Now, a couple of days in intraday trade, we did see Netflix falling below that key 50-day line, but The important thing is it didn't close below that level. And
Right.
now it's moving nicely higher with a gain of about 3.5% today, Justin.
Yeah, exactly. And if you go to the weekly chart real quick, just to make a quick distinction, because we often talk about the 10-week line, we'll talk about the 50-day line, and a lot of people are asking, is it the same thing? Because 10 weeks is really 50 days. Well, the difference is that the 10-week line is going to just have 10 data points. It's looking at the closes of each week. And so you can kind of see that just as you were talking about, it's really that close below, a decisive close below that we're looking for. And Netflix never did that, either on the weekly or on the daily chart. So it was able to hold above that line in both cases, and each time maybe test it a little bit, but get support. Now, if we go back to the daily, you can see that we did have a strong bounce here today. Another case of where the relative strength line has been pulling back quite a bit, as this is pulled back while the S&P 500 was showing some strength. So that's not necessarily disqualifying the stock, but it is nice to see that strength come in. I personally don't like to buy on weakness. I don't mind
Mhm.
buying on a pullback, but I always want to wait for that bounce because it just gives me a little bit more confidence that I'm on the right side of the trade and buying on the strength.
Right. What are your thoughts, though, on the volume that we saw today?
You know, volume has been really tricky lately. Now, we're going to be going into the summer months. Normally, you expect volume to kind of come in, when that happens. But we really saw this huge surge in March, and we're still seeing a lot of that surge. Even, recently, we had the Nasdaq Composite crossing over 6 billion shares traded, which is that's a lot. And so, one of the things that we're looking into is sometimes you can have the lower price stocks kind of fudge that number a little bit and make it seem higher than it is. But with Netflix, this is a high price stock, and it did see a little bit of a surge there in its volume because of the March action. Those big spikes that you see as the volume was raised in most stocks. But it's kind of settling down to normal levels. So while I would have preferred to see heavier volume, closer to average, the fact that this is heavy compared to the recent activity, if you just kind of look at the last, let's say, week or two, this was definitely the heaviest that you've seen in the last, maybe 10 days. And so that gives me some confidence that this is actually some serious buying going into there.
Great. And one last question here. So if this was actionable today, at what point, if traders out there missed it, at what point tomorrow, if it keeps climbing, would it be considered extended?
This is tricky. I mean, there's some people that say, oh, you can go all the way to the high, the previous high and buy it, but it really depends on the severity of the pullback. I like to try and stay within, a few percent of that 50-day line, if at all possible. So I
Mhm.
think it's still buyable right now, but you don't want to go chasing stocks too much,
Yeah.
because the higher your entry, the more likely you are to get shaken out. And it's always a little bit trickier buying stocks if you're initiating a position off the 50-day moving average line, that first test of the 50-day moving average line. It's much better if you're adding at that point, because you
Mm.
have the lower cost initial position that you're just adding to with fewer shares, because again, that's the way we pyramid, so we don't drive our average cost up too much.
All right, great. And last but not least, let's check in on Wingstop, seeing an upside reversal here with the stock almost pulling back to that 50-day line, not quite, but moving higher, some 2.6% today. And this one though, I will say it didn't really give a proper base entry before now. So how should investors be looking at this one?
I mean, you certainly can look at that cross above the 103.15 as an entry. We tend to shy away from these where it goes immediately into new high ground, because our expectation is usually that you're going to have a pause as especially when you come up so strongly from the bottom. And I think you're right. Wingstop was a tough one to handle, because the expectation was always for that pause to come, and it never did. And then you just had this strong move. It was up 20% before you knew it, and now it's been kind of going sideways for a little bit. Hasn't really come back that much down, considering how strong that move was up. In fact, what you really are seeing is it really had that 50-day line kind of come up to meet it, instead of it really pulling back hard. So this is probably one of the first chances that Wingstop is giving you to get back into it. And Wingstop and Netflix are both a little bit tricky because, you kind of think of those as the coronavirus plays, with people staying at home, more Netflix watching. And, we saw that from their last earnings report with a huge subscriber growth number, especially on the international side. Wingstop, they've got pretty small overhead because their stores are smaller. They really are designed for takeout, so that was one of the things that they had kind of a competitive advantage there, that they weren't as reliant on their dine-in, and
Right.
that was beneficial for the coronavirus shutdown. But both of these are still showing strength, and while they might not be getting the same kind of story behind them, they do have solid numbers and revenue growth. So that's what's putting them on our radar right now.
Yeah, that's right. And we've definitely seen more and more buying opportunities lately with these pullbacks and reversals,
Mm-hmm.
as well as breakouts from those 3 and 4 weeks tight patterns.
Right.
Another FANG name that we talked about yesterday, Amazon. That's what we saw with that one today.
Yeah.
Took a look at Facebook and Netflix. So there's definitely some interesting buying opportunities that we're seeing right now.
And that's the thing, is you want to be very careful. It can be so easy to chase stocks. You really want to try and be very disciplined in your buying, and try and buy from those 3 weeks tight, those pullbacks to the 50, and those breakouts, because that's where the odds are just more in your favor. And as you start buying extended, it's just easier and easier to get caught in a normal pullback. And that's where it's really easy to get out of phase with the market. So you want to just be very cautious of that. It can damage you psychologically when you see everything else going up except for the things you own.
Yep. Well, we talk about these strategies in much more detail on IBD Live. That's our morning live stream for the first hour plus of trade, where our experts share their screens, talk about actionable stocks, where to add, where to scale back, where they're exiting. So just a ton of great strategies for you as an investor. So we definitely hope that you join us. You can check out more details on that at investors.com/IBD Live. Just a reminder, these conversations are for educational and informational purposes only. Make sure to do your own research. And with that, we'll sign off for today, but we'll see you right back here tomorrow.